Taking the leap of faith and quitting the corporate career, I knew there would be challenges, but it's hard to really understand what that feels like in terms of wins and then challenges and weathering that storm and keeping moving. I haven't reached the top of any mountaintop yet, but I've created a lot of momentum, but there's been a lot of challenges, but what I'm trying to do is just keep moving. I have a 20-year goal and won't get there if a challenge that comes to me yesterday derails me for the next week.
My guest today is John Anderson, founder of Blue Cedar Property Group, a real estate development firm focused on luxury, single-family homes in Greater Boston. John launched Blue Cedar in 2023 and after nearly 20 years in data and analytics consulting. And he has brought that analytical, disciplined approach into development, especially around design, execution, and value creation. He focuses on new construction and major renovations in communities like Wellesley and Winchester, where the margin for error is small and the expectations are high. Today, we're going to talk about his career pivot, his approach to development, and what he's seeing in the Boston luxury market. John, great to have you here.
Yeah, thanks for having me, Enis.
I'm really excited because obviously you and I have done some video before, but before we actually get into real estate, share with everybody watching and listening, how did you and I first connect? Because I think there's a good story there.
Yeah, well, I think it was one of these meetups. I had been, like I said, I had a nearly 20-year corporate career in data and analytics consulting, and at some point along the line there, at the end, things were going well, great paying job, but just decided that I needed something different for the next 20 years of my career based on just time, control of time and spending time with my kids and my family rather than just working with other time zones and in the corporate life. So I 3 years ago, almost to the day now, I made the leap, burned the boats, and quit the corporate career. Yeah. I came across, for the previous few months before that number of months, I had been researching, how do we do this? How do you make money in real estate? What does it entail? What are the different ways? And that was all. I found a lot of information on YouTube and on the internet, but it was all like national people. Yeah. So it was great theoretical information and great principles and things, but numbers and like how does it really work in Massachusetts? Was anybody flipping homes in Massachusetts? Right. I didn't know. So and then I came across your YouTube channel, which is amazing, and you go into a lot of great detail and a lot of local detail that's super helpful for local investors and real estate developers. And I just reached out. I think I sent you an email, and, and I was like, you have no idea who I am, but I'd love to learn.
I remember that email really well because obviously it was so thoughtful and so well put together that I'm like, I actually responded right away. I'm like, thank you for watching the videos. I appreciate that. And honestly, the lesson learned there, and I think why it's important, that why I'm bringing it up is that it's okay to reach out to other people that are doing certain things that you want to do, right? I need to remind myself too, because I'm also, yes, a full-time investor, but I'm struggling in different things every day, right? So it's okay to reach out to the other developers, other people in the business and say, hey, how do you do this, right? So I'm glad you did. Here we are, 3 years later, right? We're actually having this episode. So I'm excited to have you here. Now, let's talk about... So what were you doing in data and analytics, and really what pulled you into development?
Yeah, so it was, there are two very different things. My schooling was in like engineering, electrical engineering, but I figured out early on. Over the course of my schooling and career, I've figured out a lot of things I don't like to do, which is important. But I started out selling electronic test equipment to engineers after school, and then didn't really like that. I didn't want to design circuits, sit at a desk and design circuits. So then I just tried to figure out what I wanted to do next. I came upon this, data management and data consulting thing that seemed really, really interesting, and got involved with a firm. And I was the 8th person in a firm, and over the course of a number of years, we grew to 400 people, and we were, bought by a large global company, and that was great. But yeah, I was really responsible. So it's all software. So we were, Fortune 500, Fortune 100 companies would hire our company to help install and configure systems to do data analytics and data science so they could run their businesses better. So I was a technical solution architect, very different kind of architect than in construction.
Absolutely.
But it was really similar principles in terms of like gathering requirements and then figuring out what the solution can be for a client given their constraints and timeline, budget, capabilities, and technical requirements. And I enjoyed it for a long time. Nearly 20 years. It was really rewarding. Both, the pay was obviously great, but the challenges, the mental challenges, and things, I really enjoyed it. There was a lot of travel involved, which was great early on, and then got married and had kids. And
things changed.
Things change. Priorities change, and was still enjoying the challenges, but now I wanted to spend more time with the family and not miss milestones, bedtimes, bath times, that kind of thing.
Yeah. Was there a particular moment that you remember that you were like, you know what, I'm just going to leave this 20-year career and move on to something else? Yeah,
I think it was a series of moments kind of building. There was and the company that I worked for was great. I still keep in touch with all of them and have great relationships. And but it just, I think we were growing, and I saw opportunities that I was hoping to take the company in a little bit, do some things, and then we ended up going in some different directions. And I was like, oh, it's kind of now or never that we're doing this improvement, and it turned out to, kind of be never. And then I was assigned, an overseas, client, which in Australia, which I could have traveled to, but again, with the young kids, I didn't want to. So I ended up, working, evenings, and I'm a morning person, and have the kids and things, and so that just got a little taxing. And I knew that was a short-term thing, right? And the projects can, maybe it was supposed to be a month or two. It did end up lasting 6 months, but even if there's 6 or 12 months, it's a temporary thing. But I knew that it could happen again, and it just really opened my eyes that my time is not under my control. And the time with the family and the kids when they're young and growing is limited. It's not going to last forever. So it was kind of at that point where I looked at the executives, and I was like, do I want that for the next 20 years, just in terms of the time and the commitment, and that, and the answer turned out to be no. So
gotcha.
Here I am.
So you and I have had this conversation, but I'm still curious, like, because when you looked at real estate, obviously you looked into wholesaling initially, you looked into fix and flips, right? But you ended up on something totally different, right? You ended up on developments, which is very, very different than obviously wholesaling or even flipping homes around here. So how did that come about? And I know obviously we can go into the first project, right? I know that was a fix and flip, but it looks like right now what you enjoy doing is really ground up new construction and heavy development, right? Yeah, no, I really enjoy the experience and the creation of beautiful design and beautiful homes, and fortunately the markets around Greater Boston, you support that kind of activity, right, and that vision. But the path to get there was definitely not a straight line. I remember sitting at a table like this in your office 3 years ago talking about wholesaling off the MLS, right? And because I had an idea or an inkling of a plan, and I was motivated enough to that I knew I didn't want to spend the next 20 years in corporate, so I had to just take action. It was one of the other guests from prior meetup talked about taking massive imperfect action. I've been kind of doing that the last 3 years, just taking action, and it's not always the right action, but it's with a purpose of controlling the time ultimately over the next 20 years. But I think so. I basically talked with my wife, and we were like, okay, we'll reevaluate this move every, say, 4 months. And then so we just started that, and I came to some local meetups here and started meeting people, talking with people locally to find out how they're doing it, learn some numbers and things, and then I was like, wholesaling, maybe I can bring in some cash, but then I probably called on 30 different MLS listings, and had the similar experience for all. And I'm not saying that wouldn't have worked if I didn't keep going, hitting the phones hard there, but
I started realizing what that activity was, and that the way it was kind of a lower margin, higher volume type thing, and similarly, like maybe smaller fix and flips. It's different profile than wholesaling, but it's still, maybe a little bit on the small margin, high volume type thing. And so I started to realize that a lot of the activity was probably sales and marketing to find the value. Because, when you're looking to generate income from real estate, they're buying at a discount or adding on, creating value somehow. You need to find margin somehow.
100%.
So on the lower margin, quicker hit, it kind of requires a certain volume and a certain deal finding capability.
Yeah.
And just kind of understanding that the reason that I made the switch was to have more control over my time. I didn't want to spend that time on the phone finding deals.
Yeah. Looking back, obviously, and actually just to put things in context, you have been now doing this full time for 3 years, right? So looking back over these 3 years, what do you think you underestimated about development when you first started? Just looking back, even at the last couple of deals, right? Is there anything that stands out?
It's a good question. I think I went into it kind of thinking it would be difficult. But I didn't know how, like what ways would it be difficult. I was just like in my mind, I had, okay, there's going to be a lot of challenges and I'll have to figure them out, but I didn't really know what the challenges were.
Yeah.
I think it's become very apparent to me, with building, probably building any scale, but the luxury single family, any scale really, like the cost of construction is like a huge variable. So if you're buying and selling real estate, if you're fixing up or constructing, there's a purchase price and there's a construction budget, and then there's a sale price. The purchase price and the sales price, in my mind, are simpler to find information data to back up those numbers. The construction costs in the middle are highly variable and kind of like the Wild West when it comes to finding subcontractors and material pricing and those kinds of things. So that to me is like probably my biggest takeaway in terms of like working to control those costs.
Why do you think that is?
That's another good question. There's no regulation, and there are licenses in terms of like plumbers need to be licensed, electricians licensed, general contractors.
Right.
So there's a certain standards, and then there's a building code.
Right.
But we can get bids for say plumbing that are 40% different from each other.
Yeah.
And it has to do with how, say, the plumber wants to run his business and model his business, whether they're trying to work high margin or low margin, high volume, low volume. So it's finding the right partners that work alongside, work towards the goals that you're working towards, and then there's a lot of subs or a lot of trades that work primarily for homeowners and maybe don't work for investors or developers, and their pricing is different, their process is different.
Gotcha.
And then materials is probably a little bit less variable in terms of like finding the cost of lumber between different lumber yards a little bit. There's still room to find efficiencies there, and you can find good costs. But in terms of like selecting, say, materials that cost X versus Y, and then what is the how far do you want to build out something that's really nice and great versus something that's good or good enough. So there's a million variables there to work on.
So I guess for you, just looking at the most recent projects, to keep costs down, is that a matter of just working with the same guys over and over again, or is it a matter of just getting multiple bids to see who's going to come in lower? Like, how do you control those costs, I guess? Because you're starting with a budget, right, up front. And you want to stick to that budget because probably you borrowed all your capital based on that budget.
Yeah.
So is there anything, like what is the process for you?
So the process for me is I'm still learning. Like I said, massive imperfect action.
Yeah.
I mean the budget when you're doing the underwriting is important, and it,
Yeah.
it works towards their funding and your construction loans and all those things. But it's also, like I said, there's a high variability in cost. So, but there's also time. So it takes a lot of time to get multiple bids and to find the right cost. So at a certain point, maybe you have 2 or 3 bids in something, and maybe it doesn't hit your budget, but there's a cost to inaction with carrying costs, holding costs. So sometimes you might need to just pick someone who feels like it's a good relationship. They have high integrity and they have good references, good referral or something. Maybe they're over budget though, and maybe you need to go with them.
Okay.
And then are there other areas where you can correct, a different line item for the budget? But then there's also, it's kind of like what is the goal, the overall goal with the build? And in my case, again, it's like I said, hasn't been a straight line. So I've been realizing that I like to build that premium product, and with that is comes a higher cost. Yeah. But it's always the decision, the question I ask myself multiple times every day is, is this creating net value? So okay, maybe it's a higher cost to put in this material, but ultimately are we potentially having a better ARV, sellout value after repair, after renovation value. Gotcha. Which is kind of an impossible answer to thing to answer in the moment, but it's a sense and a feeling of knowing the market and what you're trying to create is the more expensive thing that you're putting in, make it easier for a buyer to spend X amount of money or not. So someone that's listening that probably wants to jump into development, right? Maybe they're a general contractor, want to do their own development, or maybe someone just like you and me really want to change careers and just start doing something like this. So where do you even get to learn all these numbers, right? Like you don't come from the construction background, right? So that's any lessons learned there, or you mentioned the meetup, and I know you're big into networking, and you connected with a ton of local developers here, and you got me in that group as well. So I know that is all great, and I'm probably helped you a lot, right? Just being curious and asking all those questions. I would say that's the first place to start, is ask other people what they're doing. Exactly. And if you can come from a place of humility and ask in a way that you're trying to create value or curiosity. A lot of people do want to help and share. So like coming out and actually getting someone's sample construction calculator or their budget on a certain thing and seeing their costs is probably the top way to start, that I would recommend starting. That said, that doesn't guarantee that you're going to get those same costs.
Right.
So this is where the variability comes in, and you have to then take a leap of faith and jump in and say, okay, this person's building at $200 a square foot, new construction, 200 square foot. This person's at $225. Am I going to hit that? And then jump in and I realized, my construction costs are probably closer to $300 a square foot, depending on the kind of what we're building. So, it's a big impactful difference, but
huge.
But
is that you said $300 per square foot for new construction,
right?
In areas like Wellesley or Winchester. Got you. Okay.
Yeah, but and again, that's kind of all in,
right?
Project management, architecture, things
Soft
like that.
Cost.
Yeah, maybe not carry costs and things, but
gotcha.
Yeah, architecture, engineering, those kinds of things.
Okay.
But again, I'm not saying that that's what someone else can achieve. Someone else can probably achieve better. Yeah, I know they do, and but. It's just kind of working, getting the relationships and things.
No, I love that you shared that. And I think what I've been surprised about is that people are willing to help, right? Yeah. And obviously not everybody will be like, hey, let me pull the curtain, you can learn everything. But again, if you're adding value to them somehow and you come from a good place, they'll share. I've realized I actually practice that with people that reach out to me, but when I reach out to others, they're willing to help. So I think I emphasize that because people should take a chance and ask questions and reach out, And what's
absolutely.
the worst that can happen, right? They'll say no.
Yeah.
No big deal, right? Thinking back to maybe, and I'm asking you this question because I know you don't mind sharing the good and the bad, right? But looking back at the Winchester or even the Wellesley property that we were talking about before recording, where did things break down?
Things break down probably with, again, not knowing exactly how the costs relate to the scope. So I'll give an example. So the Winchester property, it's an 1840s, Greek Revival farmhouse that we're taken from 2,500 square feet up to 5,300 square feet, adding a garage, an addition, and things. It's a big undertaking, all new structural, floors and roof and everything. And it's a historic house. And so working with the town on the historic commission was fairly smooth. Working with the chair there, no problems there. But one thing was to make sure that the exterior trim had some detail.
Right.
And then when we designed it, it had some detail, but to me it didn't have the right amount of detail, and so I felt like it deserved better treatment.
Yeah.
But I didn't know exactly what that meant in terms of like design and material cost.
What did you end up with?
Well, so I ended up taking a deep dive into like I designed and inspect the exterior trim myself because I enjoy design and things. I'm not a designer or architect or anything, but I went down the rabbit hole in terms of like classical orders of architecture and Greek Doric architecture and things like that. So I designed this facade, and it was the scariest thing ever, but it turned out beautifully in my mind. But we probably end up spending like almost $100K in material on siding, siding and trim just because of all the detail there.
Yeah. So this is actually a good segue to that design, and I guess how do you balance design ambition with budgets, timelines, and resale price, right? Because obviously you got to make a decision, like you said. That was you spent so much time researching it, came up with something that you were really excited. But again, cost versus is the market gonna pay you back for it, right?
Yeah. I think. To me, probably the best way to go about that is if you have experience. You learn from each experience.
Right.
So right now I'm learning from those experiences.
Yeah.
So like I don't have the answer maybe when I'm making that decision.
Yeah.
But in my mind, this is my 20-year plan.
Yeah.
So in my mind, I want to create a beautiful portfolio that can then create credibility and help future projects. So. So the bottom line for a particular project isn't my long-term focus, but the more that I focus on the value that's created for the community and the beautiful products, the more that bottom line will grow over time.
Yeah.
Now, obviously, we're frugal with our investors and want to give them great returns and things like that, and be financially responsible.
Right.
But part of being an entrepreneur is to have the flexibility to make bold decisions and to really think about what your goals are. If your goals are, okay, I want to have the highest margin on this particular project, and I don't really care about what the future projects hold, then those are going to be very different design decisions than, okay, I want to build a 20-year portfolio here, and this is kind of the base of that.
Yeah.
So it depends on kind of what your long-term goals are, and then you have to understand the market, like you said. So in Winchester, this property, I felt the market definitely supports and they enjoy and pay for historic homes. So I did feel like that decision was backed up on the back end with actual real estate value.
Yeah.
I just didn't know the exact specifics, which is a little scary.
Right. But so I guess you focus on Wellesley and Winchester. What makes those markets attractive for development right now? Because obviously we have other expensive areas, right? Like Weston or Lexington or Needham, right? So why Wellesley? Like how do you look at that town and say, hey, that's actually where I want to build?
Yeah, well, I think you can't go wrong with a lot of towns in the area.
Yeah,
these just happen to be the towns where I started, and then when you take a look at a market like Wellesley, it is very resilient to rate changes. The rates have been crazy the last couple of years in terms of going way up, and then now they're coming down a little bit. But with homes that are $2, $3, $4, $5, $6 million, those are different kinds of buyers that maybe are a little bit insulated from rate changes. Or, and then, there's just a high demand. If you look at, so, again, I'm a data person, and so I study the sales and how long it takes to sell a home, and what are the median prices, and then what do those products look like, and so just a market like Wellesley, and I also enjoy design, so I enjoy traditional New England architecture.
Yeah.
So whereas a place like Lexington maybe has a mix of ultra modern and traditional, Wellesley maybe is a little bit more traditional, so I enjoy that aspect too.
Okay.
So I think the combination of the design that the town enjoys and the robust nature of the market for that level of product I want to build makes it a good fit.
Gotcha. But someone that wants to, again, start out or maybe move up, from like a fix and flip to new development, like how do they go about selecting, how do they really narrow down that area, right? Should they have a good agent in the area that can guide them? Should they reach out to a local developer in that area and pick their brain? Like, just knowing what you know now, what do you think would... Because I personally struggle with that, right? I've always had the shotgun approach where it's like, we're sending direct mail to thousands of people.
Yeah.
The good thing is that you get leads. The bad thing is that you are all over the place and no one knows you, right? Because you are kind of in every town. So I've always thought about that. How can we narrow ourselves to maybe just a county instead of 5, right? And that's hard. So I'm just curious, like, how you think about that.
Well, I think it's another good question. I think working backwards from your goals might be a good place to start in terms of, okay, what are my goals in terms of like time and income? And then, okay, how much time, maybe if we start with income, okay, how much do I think I can make on a particular project of a certain profile? And so it's learning the profit numbers, learning the purchase price numbers, learning the sellout values, and then say, okay, for a particular project, if I get a certain profit from one project, how many projects do I need to do to get to my goal? Am I trying to build a large team, a large business?
Yeah.
I mean, for me, again, the choice was to, time is very valuable to me right now, so I don't want to do a large volume of things. So I'm looking to do probably 2 to 4 projects a year. That's a different approach than if you want to do 10 or 20 or 50 projects a year. So I think starting with your goals and working backwards there, and then once you identify maybe the number of projects and the type of projects that you want, then you can look for the markets that might support that. I also find, again, with the lower volume approach, it's a little maybe simpler, I don't know if easier, but simpler to focus in 1 or 2 communities, because it's also efficiency. Like you learn the bylaws and learn the town inspectors and those things. So
the brand, right? Now you have a brand that's out there, and you guys do a great job with putting the signs outside the site and all that. Again, it's hard for me to do that, even if I put signs at the ground, because one is in Framingham, the other is in Boston, maybe one is on the South Shore. It's just you don't get that brand recognition from one town. Okay, cool. If you don't mind me asking, let's shift gears to like financing a little bit, right? Because these are expensive buildings. How do you personally think about risk when you're tying up all this capital in a single property? And so that's a mindset question. And then just walk me through like the process with investors. How do you raise capital? And how do you go about securing capital to buy the property and then build it?
Sure. Yeah, well, I guess the way I think about risk, like you said, I do think of that as a mindset question. There's a risk of taking action and the risk of not taking action. And there's different costs, potential costs of those. For me, again, I'm really invested in figuring this out over the next 20 years. So maybe the risk of not taking a risk is I have to go find a corporate job again and go that path again. So I'm going to kind of make some bold decisions. But the other thing is really looking at the market. So market, the times change, and these are longer projects. It might take 12 to 18 months. So, there's no guarantee that the market that I look at today will be the same.
Yeah.
So you want to build in some margin. But again, that's why I look at, a place like Wellesley that's been fairly consistent. And Greater Boston in general, has been pretty consistent over market change, but there's pockets that are, more, or less volatile than others as well. So really understanding the market and being like, okay, does this feel like a market that has weathered the storm in the past and can support this kind of property? And then it's, okay, what level of property do I need to build in that market to sell for what I want to sell for? So that helps to inform design, and then the design helps to inform the level of construction cost. And then it's, does that all align with my goals that I want to go for?
Yeah.
And then from there, it's, if it's yes, and yes, then it's okay. What purchase price am I looking for? And then very round numbers will say, if I purchase a property for $1 million, put $1 million in construction, and sell it for close to $3 million, that is kind of a general maybe profile.
Yeah, I was going to actually ask you about those numbers, because obviously I know the area you're buying and the price points, but people listening or watching this, they'll be like, well, I have no idea where Wellesley is or what what they're building. So, but roughly those are the numbers, right? You're looking to buy for $1 million, which is kind of, the rule of thumb for new construction was 1/3 land, right? And these are tear down. So you're buying existing homes, you're tearing it down, but you're buying roughly for $1 million. You're putting $1 million, another third into construction, and then that last $1 million is your holding cost, your commissions, your profit in there, right? Your financing cost,
right?
But is that pretty much a typical deal?
Yeah, that's a good framework there.
Okay.
Yeah, and then your question about finding investors, so it's about an investor wants to make money with their money, and they want to try to do it. Different investors have different levels of risk, but they want to understand, the diligence that goes into a project like this. Yeah. And so it would be, creating a packet that might give the project an overview in terms of there's a cover letter describing what's going to be built, the market, the sales in the market, why we think it's a good opportunity. And then there's a pro forma in terms of breaking down the purchase price and the construction costs, like I said, all the holding costs, the financing costs, and ultimately the projected profit, and the time frame. And then there's probably building plans, and then if there's the projects. Another thing that I kind of enjoy a little bit is that the projects I've worked on have needed to get special permits, like through the zoning board, or work with. Actually, just yesterday we got approval on my latest project for the historical commission we got a demo waiver granted.
Congrats!
Last night, yeah, thank you. So,
but that's how you're adding value, right?
Right.
When you're looking at these projects, you're adding value through that process. Are you personally guaranteeing all these loans with private lenders?
Yes, yeah. Mm-hmm.
So that's where, obviously, as investors, that's where we take risk. And I guess, how do you build that trust with them, right? Because they're investing in you. Yes, the project makes sense on paper, but I think more than anything, the trust has got to be there, right? They're investing in you, I think, first before even they invest in the project.
Yeah.
Tell me more about that. How do you go about really building trust on borrowing hundreds of thousands of dollars, right?
I think it's about relationships and really connecting with an individual. Again, because I'm not looking to have dozens of investors. Right. I like a handful of people that know how I work and I know how they work, their expectations. So I think clear communication of projections, but also challenges and risks. Just different scenarios. Say, okay, this project coming up that I'm looking for investment. We need a special permit from the zoning board. If all goes well, maybe that takes 3 months. If it doesn't go well, maybe it takes 4 or 5, 6+ months. And so kind of understanding the different scenarios and options and contingencies and, what may or may not happen with their investment if X happens or if Y happens.
Yeah.
So I think the communication and just the, professional presentation about things and then along the way, keeping them informed of what's happening.
Yeah. No, that's, I think building that trust, man, is probably the most important thing. But starting out, you probably started working with people that knew you and trusted you, right? So you're not going to somebody totally foreign, right?
Yes and no. So kind of building there. So I started with some friends and family,
right.
But then also through networking, was introduced to some people. But then, during the networking, started creating trust with people I was networking with, and so they felt comfortable then referring me.
Yeah.
So it's maybe a second-hand contact
Yeah.
that was a referral through someone
Right.
that I built trust with. So it is slowly building trust with people, but it's not to say that it's maybe someone that be in your network today, but maybe it's in the network of someone that's in your network.
Yeah. No, that's awesome. I'm definitely a big fan of what you're doing, and obviously 3 years ago you were reaching out and you wanted to pick my brain and asking questions, and I'm actually happy that now I got someone in development, because I don't do it. I mean, I've done some new construction, but that's not my bread and butter, and I can reach out for different things that you're doing, right, and share subs and ideas and things like that. So
I
definitely
don't have all the answers though, but.
Which is fine. Again, you don't need to have all the answers, but just even bouncing ideas off each other.
Mm-hmm.
Before we wrap up, I'll ask you a final question. What's something you know now that you wish you knew when you started?
That's another good question. What's something I know now that I wish I knew when I started? Maybe it's the what it feels like to go through the different challenges. So again, taking the leap of faith and quitting the corporate career, I knew there would be challenges, but it's hard to really understand what that feels like in terms of like, wins and then challenges and kind of back and forth. So just kind of, I guess, weathering that storm and keeping moving. The way I like to think about the last 3 years is like momentum and resilience. So, I haven't reached the top of any mountaintop yet, but I've created a lot of momentum, but there's been a lot of challenges, but what I'm trying to do is just keep moving, and not stay still, not let a challenge, stop me, because I have a 20-year goal, and I won't get there if a challenge that comes to me yesterday, derails me for the next week.
Yeah.
So I think just that, what it viscerally feels like to go through that.
Yeah. I guess one more question comes to mind, because there's going to be people that are in that corporate world that they want to do the same thing you did. Mm-hmm. Is there one thing as an advice that you'll be like, hey, just kind of pay attention to this, or make sure you have enough savings to do that? Like, is there anything that stands out that you would really point out to somebody that wants to do the same kind of jump ship from corporate world into real estate investing?
Yeah, I think there's probably in two areas. One is mindset. Like, again, you have to really think what are my goals and how much am I willing to go through to get there. And realize there's going to be challenges and things that you don't know, and so it's taking action maybe when you don't know all the information, but you've done as much as you can, and then you just have to make a decision. So there's a mindset to keep moving, and then some of the tactical, like financial responsibility, just in terms of like really knowing your personal balance sheet, having savings, your cash flow, manage all that very tightly so that you have projections and maybe a timeline, and if those projections change or if things change along the way, like really not sticking your head in the sand and be like, oh, I hope it's okay, but really knowing kind of your balance sheet and your P&L, like, okay, is there a specific course correction I need to make? Do I need to raise more money? Do I need to, get a part-time job? Do I need to, buy another project? Something like that.
That's all great advice. Thanks, man. This is exciting. I appreciate you. You're really making time for me. We obviously have the meetup event, so I know you're going to present there. For everybody watching, and you are local to the greater Boston, come to the meetup events. Come meet guys like John and the rest of the panelists that we're going to have tonight. We're going to put comments, we're going to put notes below as far as the Boston Real Estate Connection meetup, where to find us, RSVP for the next meetup, so we can network and get to learn, right? And do something good in real estate investing. Thanks, man. Appreciate it.
Thanks, Enis.